Good afternoon, everybody. Good afternoon. Welcome. Here we are to Paul's Monday Market Update number 221 for Monday, 13th of April, 2026. I hope you're well. Hope you've had a good Easter period. Hope you've enjoyed this volatility in markets, whether you be engaged or merely sat on the sidelines watching the shenanigans play out. Either way, it has been quite some couple of weeks, hasn't it? Anyway. For those of you joining us for the first time, the Monday Market Update is just that. It is me just flying through as much as I possibly can do in the sort of next 30 minutes. I'm looking to effectively give you some insight on strength and weakness within FX indices and commodities. I look at some charts of some stocks or ETFs that are of interest you might want to add to your watch list, and then a look at the live markets. It's not a signal service. It's not trade recommendations. It's just me sharing with you what I'm looking at the moment, which might be of relevance or interest to yourselves. As always, you're very welcome here. Just remember, you are always responsible for your own trading decisions. If you want a little bit more education, this afternoon I'll be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. Today's educational piece will be about how to trade price action combinations. You can join us if you wish for either register through the Active Trades website or that QR code will take you there. And if you want a little bit of help and support in your own trading journey, the VTP Trader Accountability Group will be running through Q2. It's where we look to build discipline, accountability, and consistency in your trading and in building your trading business. Once again, if you want to join us, the QR code will take you there, or you can ping me if you've got any questions about that. Okay, all right. Let's dig into the data. Okay, so if you're new to trading or new to joining us, I appreciate this might not necessarily make sense, but it'll become apparent pretty quickly. Okay, these are snips out of my own weekend work that I do on my own model STAM, where I'm looking to identify the sort of strength, trend, and momentum, primarily in FX markets, but then indices and commodities also. The reason being is that it helps me kind of focus my time, energy, and resources better for the week ahead. So what is this telling us, and how can we utilize it in our trading? So here we are. We are into week 16 of the year. Okay, for the 13th of April. Where's the strength and where's the weakness? Well, I normally do this on a Saturday morning, and normally that's absolutely fine. But of course, over the last 6 weeks or so, it's not unusual to have even sort of shifts between, sort of Friday night, Saturday, Sunday, Monday, based upon, the events going on in the world. And of course, at the end of last week, we were all basking in the joy of a ceasefire, but then invariably, sort of Sunday, we saw those talks fail. Okay, although they were just only the first talks, and then of course today, Mr. Trump's been talking about how he's going to run his own blockade of the Straits of Hormuz. Okay, so of course, invariably, that has provided all sorts of shenanigans and volatility there. So where we are still looking at is that Aussie is basically back to the top of the pile there, and that was a bit of that is just a risk on reflection, I think, of the sort of the ceasefire. In terms of what we saw was a great sell-off of US dollar at the end of last week. See how a couple of weeks ago it was top of the pile, the dollar, because it was basically the risk-off play. You had basically war on, risk-off, dollar stronger. But invariably, once that ceasefire got effectively sort of confirmed on Tuesday, what we saw was a big sell-off in dollar and a move into risk-on assets. Hence why we saw Aussie. But equally, we also saw euro push its way up there into the top place, and I think that is just the anti-Trump, anti-dollar trade. Sterling benefited from it. Okay, it wafted higher even as Starmer was wafting around the Middle East, trying to claim some sort of credit for basically doing nothing. But anyway, that didn't bother sterling. Okay, sterling had a little bit of a jump off the back of that. Yen managed to fall its way down. Kiwi fell its way down, and Canadian dollar. What we'll see is kind of where it had been strong. You see, it's up to third a couple of weeks ago. That invariably dropped as we saw. Okay, the price of oil drop. But invariably, that's kind of reversed a little bit, which we'll look at in a moment when we saw the events of yesterday in terms of those talks in Islamabad failed to achieve anything. I mean, I don't know why people were particularly shocked. Doesn't surprise me that invariably that no big deal was organised on the first meeting. I think the important thing is that even though the Americans have gone home, it does appear that as if they are still talking, and that's kind of reflecting perhaps maybe how it might be a sort of a longer drawn out issue. Certainly, if we look at how markets have been, okay, FX markets since they opened sort of last night for us here, well, we can see that pretty much everything has weakened against the dollar on the sort of tactical intraday basis, which is not a surprise. As I said, that kind of dollar had a little bit of as we will see in a minute, kind of gap down. But interestingly, it's kind of been working its way back up to try and fill that gap in the overnight Asian and London session, but easier to look at that when we look at the charts in a minute. What is of interest for me is that seeing sterling and euro pairs are in buying. Okay, they're in STAM buying conditions. Okay, STAM 1 Bravo, STAM 2 Bravo. Okay, that's giving us that indication compared to where we were 2 months or so ago, where pretty much everybody was selling sterling and euro. That's kind of checked. And actually, what we had seen is that invariably quite a lot of the Aussie and Kiwi pairs are either not in STAM or have come out of STAM, or no surprise for Kiwi pairs is that they are still remaining kind of selling environment. So we'll look at that a little bit more in detail a little bit later, and also on the stage 2 call tomorrow. When I look at the indices and commodities, well, what we actually had, if you remember, last week's, or the kind of 2 weeks ago, we were pretty much a sea of red. But that ceasefire brought back a bit of war-off risk-on giddiness, and actually what we saw was, you can see those major American indexes had pushed their way back into being into STAM 1 Bravo, STAM 1 strategic buying. Now, we'll see whether that filters through, because, of course, we need to see how American markets open this afternoon, see how they interpret that. We also have, it's not a major week for data, but there is a bit of PPI data tomorrow. Okay, we had CPI data end of last week, which just confirmed that there is, inflation is building back up in the markets. Okay, I don't think people are massively shocked, but I think what people will be focused on is that we get into earnings season with a vengeance, okay, this week. And in particular, we've got an awful lot of the financials, okay, a lot of the major banks this week, which we're going to look at in a moment in the charts of interest, but also ASML, Taiwan conductors, Pepsi, Netflix, etc. So we really sort of kick off the sort of earnings season this week, and naturally people will be keen to see how they have done, and that of course will have an impact upon that overall sentiment. Certainly, if we look at the sort of as we will see at the moment, the kind of what we can see in terms of the other major indexes, okay, in terms of DAX, FTSE, Nikkei, ASX, they hadn't followed through in terms of their kind of risk on buying in terms of the returning to a STAM environment. But Bitcoin had basically gone to a tactical buying environment. Okay, gold and silver remain in tactical short environments. Okay, the VIX was mixed, but had come down massively from at the start of last week, where it's trading up towards kind of like 30, 31. That was a huge difference there, huge impact. So once again, we start the week in a bit of a strange situation, namely that everybody knows at some point this war is going to end. Everybody wants a piece of that peace trade, but invariably, it is not a straight linear line to that, is it? It's invariably the shenanigans of the talks, but also the let's say the somewhat volatility of President Trump's communications. Now that might well be part of his overall strategic plan to keep everybody on their toes and to hide strategic intent. And that could well be part of his plan, but invariably that makes it hard, doesn't it, for traders to, especially let's say swing and position traders, to actually take any kind of position with any kind of conviction at the moment. So another week of volatility ahead, ladies and gentlemen. So there you go, as the Chinese say, let you live in interesting times, and I think it's fair to say we certainly are at the moment there. If we just take a quick look at the latest STAM plugins, this is the plugin that people on BTP Stage 2 get, which gives us a little bit of kind of insight into the, well, it updates, okay, and runs its way. What I'm interested in here, because the kind of very latest in terms of the latest data, and what it's telling me here is that boom, Aussie's top of the pile there, printing 17, which I can see here. Okay, has drifted off a bit, but it's still top of that pile there. Euro, okay, is just reflecting what we talked about from the weekend. Okay, Euro's in second place. You've got Aussie in first, Euro in second. We've got Sterling there, okay, mincing about in third place. Swiss franc into third, and dollar, which had been top of the pile, has kind of fallen its way kind of halfway down to the STAM, right? And then at the bottom of the pile, interestingly, still Japanese yen, but then also Canadian dollar. Okay, that's kind of interesting. So even though oil did have a bounce this morning, that hasn't filtered through into Canadian dollar prices there. So we can see Japanese yen and Canadian dollar weak as anything there. All right, so that's the latest update there. So let us now switch across and have a look at a few charts of interest, okay, of some of the stocks that have got earnings this week. So if you'll just bear with me for a moment, we'll switch across and have a look at those and then look at live markets. So just bear with me for a moment, ladies and gentlemen. Okay, here we go. Some of the charts of interest. So this is just me putting up a few charts of interest, talking at some normally kind of equities or commodities or ETFs that are of interest, whether it be through earnings or whether the actual price action on the charts. Okay, but the charts are always pretty simple there. Okay, normally weekly charts, blue 20 period, red 50 period, and green 200 period moving average. So as you can see, Goldman Sachs, they released before the open today. It looks like the sort of the flash news that I saw there is that basically they were printing well, okay, doing well. But intriguingly, what we were looking for, okay, is invariably that we've seen, we'd had that kind of ceasefire pump there, but interestingly in the pre-market, we're a little bit off that, even with those good numbers, and that has said maybe that's a little bit of a reflection, okay, a little bit of a reflection of the overall kind of nervousness after the failure of those talks yesterday. So, well, as we can see, we'd looked at these guys a while. It's been in a fantastic uptrend, hasn't it? Fantastic big weekly uptrend. Came off due to the war to $800. We talked, I think, a little bit about it pivoting around 800, and would the 50 continue to act as the kind of great support it has done in the past? And invariably we can see it kind of reversed and we've pushed our way back up higher. So yeah, no surprise to see maybe the pre-market's holding a little bit lower, but I'd say that's still overall bullish, all right. But many people would say Goldman Sachs is it is sensitive to sort of risk appetite and volatility spikes. In my word, we've had plenty of them. So a lot of people would look at Goldman Sachs as a bit of a kind of a pure confidence proxy, all right? Namely, sort of its strength is a reflection of kind of some risk on conviction. That's what we'd be looking there. And I think, yeah, if we get good news from the rest of the financial sector, okay, well then, and we get some clarity on what's going on with Iran, well then, to me, that would be bullish and have us pushing back towards the 950 area. Next one is JPMorgan. So they're sort of releasing tomorrow after the close, okay. But invariably, listen, everybody knows JPMorgan, big, best-in-class US bank, strong balance sheet, strong capital positions, okay. So their kind of their income's normally sort of supported by higher rates, and should we continue to see kind of the flux or the flip that we had seen from interest rate cuts to possible interest rate hikes, that will help them going forward. But what we will see is that very often kind of JPMorgan's kind of it's seen as a little bit of a how would I describe, like almost like a little bit of a defensive leader, all right, within that financial sector during areas of uncertainty. Once again, like Goldman's, you can see this has been a great trend there, hasn't it? Okay, overall great trend, but we came off and came back to sort of $300 in the 50 period moving average. And I think I talked about, a few of these a few weeks ago about, would that 50 act as support, would the big round number of 50 act as support, and certainly the kind of the ceasefire helped that in terms of, pumping price back up above the 50, back up above 300, back up above the 20. The sort of pre-market's a little bit lower there. Okay, perhaps no surprise, but I think maybe it would not surprise me if we get maybe a drift into 300 in front of their numbers, and if we get good numbers and some good messages from the Americans or the Iranians, well then once again we kind of work our way higher. But it's almost like kind of price sort of coiling up around 300. And good numbers we push higher, poor numbers or some a turn for the worse in the war and drop lower. But we're into that point where we're looking to it's we're going to be making a decision in the next 48 hours, I'd suggest. Next one is Citigroup, and this is this is where I'm starting to get interested because we've just looked at Goldman Sachs, we just looked at JPMorgan, which are trailing their highs, their recent highs, but Citigroup, okay, I'm going to look at Bank of New York Mellon as well. Okay, Citigroup, well, you can see for yourself here, okay, that they didn't come off as hard as JP Morgan and Goldman Sachs, and they have reversed and pushed much higher, and in fact back up to these all-time highs here. That's kind of back up above $120. That's what kind of got me interested. So, I mean, they have been going through this kind of restructuring project, kind of cost-cutting drive, this kind of whole turnaround narrative, and they've I don't conclude myself to be a banking specialist, but normally they were seen as a bit lagging profitability versus their the peers that we've just spoken about, which had kept their position a bit cautious. But you can see for yourself that that has kind of rallied pretty strong higher again. It's and sometimes people would associate with Citigroup with kind of almost being like a kind of like very sensitive to sentiment shifts and kind of moves first, and perhaps maybe that's why with the sentiment from last week, that's why it pumped itself so higher again. It did trade to the highs, didn't and really, if you're looking at that from last week, that was kind of that's its highest weekly close, right? So it's highest weekly close, and stuff like that you have to sit up and take notice of. But yeah, once again, they're releasing theirs before the open tomorrow, okay, to see how that particularly plays out. But I'm curious that they have, as I said, already pumped higher. And was that just like a little bit of was that a bit of sentiment giddiness, right? Just that ceasefire giddiness, okay? Is that what we saw there with Citigroup? Because invariably we also saw kind of similar with BK, sort of Bank of New York Mellon. They are on where are they? They're Thursday, all right? They're Thursday before the open. But once again, having had this fabulous weekly trend, isn't it? Fabulous weekly trend, a bit of a pullback into the 20, beneath 120. Once again, that kind of ceasefire sentiment has just, war off risk on has pumped us higher there, hasn't it? Considerably higher again. Once again, that's the highest weekly close. And so you've got a question as well, is that people positioning in front of the earnings on Thursday? Is that just overall kind of sort of giddiness sentiment? Is that or is that, as I said, is that just likely to fall back to 120 as kind of the global volatility, and the numbers kind of get released? We'll have to wait and see. So normally what they're saying is kind of Bank of New York, when these guys are strong, this is kind of showing good, solid institutional participation, all right? And so you can certainly see that that's what's happening there, okay? That uptrend is still working its way higher, okay? And as I said, I'll be curious to see if whether yesterday's geopolitical trauma brings us a little bit lower, but maybe that might be an opportunity to sort of, to trade the pullback and, around the news once we get some clarity on that, okay? So as I said, one you might want to add to your watch list. Another one, okay, who are releasing this week, Thursday after closes, Netflix. Okay, a bit of a divergence from the kind of financials that we've just looked at, but it's an interesting enough tale as it is. Kind of, well, you can see for yourself, once again, great weekly trend, but invariably we kind of fell away from here. And part of that was the sort of shenanigans about their kind of mergers and acquisition plans, okay? And you can see that invariably when they failed that, what an impact that had on the share price. Okay, we popped higher, and we've kind of now last week we've kind of worked our way back up above 100, right? Back up above 100. The pre-market is actually even a little bit higher. You'd have to be wondering, could it drift its way back up to like 108 in front of the news? All right, so it's what they're saying is that it's got strong earnings momentum driven by subscriber growth and monetization, so kind of pricing and ads, etc. So market looks at it as a bit of a high quality growth leader. Some might say that that's an elevated valuation that's dependent upon them being able to continue the execution of their plan and stuff. And so Netflix is very much that kind of risk on momentum name, and so that's great when things are going good, but equally it means it's vulnerable to any kind of growth disappointment as well. So yeah, Thursday after closes theirs, but I wonder whether it'll have enough to sort of, as I say, drift to 108 in front of that news. Okay, so as I said, you might want to add that to your watch list and see how it plays out. And finally, one, this is kind of a bit of an interesting one. This is kind of perhaps more of an educational one, all right, for sort of traders and joining us for the session. So this is, in TradingView, it's FSTHM, right? It is the FTSE Mid Cap Index. It's their own interpretation of the index. It's not a reflection of the FTSE 250 MCX or FTSE 350. That's NMX, isn't it? That's the tickers there. But this was kind of giving me, I look at all of these to take a look at, what's the state of the UK, where, if anywhere, is the opportunity. And as I said, this is their interpretation of the mid cap index. And the reason I'm interested, and the reason I thought it would make a good piece to talk about, is this is also just a little bit of a good educational piece here in terms of price pull back into the 50 period moving average, and they've been in just a fantastic trend. And for those of you like your classical patterns, etc., there's plenty of them there. But once again, back up to the 50 period moving average and dropped, and then invariably a bit of a false breakout, pulled back up to the 50, and hey presto, we dropped again. But what's of interest to me is that we have, after several years now, right, we've had across the 20 and 50 period moving average, but actually we've flipped the 50 from the 50 here being dynamic resistance. We are now, looks like we are flipping it, and actually it looks like basically we're now flipping it from being resistance to support. It's been finding some nice support there. Okay, the 20s turn up, the 50s turning up, and I wonder whether that is a reflection, okay, of some interest in general mid cap stocks. Certainly, if you look at MCX and NMX, they had pulled back, okay, but so had everybody, all right, off the end of the war. But I wonder whether this is just an indication of maybe there's some underlying opportunity there. Not in the FTSE 100, because FTSE 100 is a global thing, but actually just looking at some of those UK mid-cap stocks and look at those UK mid-cap index. So as I said, it's a bit of an interesting educational piece to see the kind of impact on the weekly charts, the 50-period moving average, how it flips from resistance to support. But equally, it might be something worth having a little bit of a deeper look, okay, if you are particularly interested in UK stocks. All right, so there we go with that. There's some charts of interest you can add to your watch list and take away. Now let's have a little look at the live market. Let's just, I'm just going to bring this up here. Let's, where are we going to start? Okay, great. So here we are. This is indices. So I've got here Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, and the Russell on the weekly, oil, DAX, Nikkei, FTSE. Okay, so just give us a little bit of an indication of what's going on. So let's have a little look at what's going on. Well, listen, why don't we start with oil? All right, you can see how volatile it's been. Okay, and actually the ceasefire saw that really big collapse beneath 100, but then boom, what we had here was invariably the break of the talks. Bang, oil's back up above 100. West Texas, it's back up above the 50. it's working its way there. I think basically everybody's waiting, A, for the markets to open, B, to see if Trump or anybody actually has anything of interest to say. But that was the, from ceasefire, which was a great short. Okay, now it's kind of the trauma pump, isn't it? Because I'm sure there'll be a lot of people sort of thinking trauma there, but also be a case of whether the sort of ceasefire in its present form, whether that can hold regardless of any kind of future talk. So that's why we see oil. As I said, let's have a look at some of the indexes. So what we can see here, and this is Nasdaq. All right, Nasdaq had been of interest to us, because we had double topped there really kind of nicely and worked our way low, and we'd worked our way beneath that 50, and then boom, ceasefire giddiness. Look at that, having broken the 50, we're back up above the 50, back up above the 20. But a ceasefire giddiness carrying its way through there. And then when we go down, if I go onto the 4-hour charts, the electronic contract, you can see how that kind of, we were wore off risk on giddiness, but then invariably the talks capped down. We capped down a lot, but do you know what? So far, we've been working our way up this morning. This is a 30-minute chart, okay? Working our way up, just bouncing off the 50. As we get ready to run into those into the kind of that US Open, and you can see that pretty much, Dow did similar, S&P did similar, Russell did similar. That was the kind of risk on giddiness that we were experiencing and expecting. Interestingly, I thought DAX didn't follow through because DAX remains beneath the 50. See how the 50 adapted as support, and then it's flipped and it's become resistant so far. So I'll be intrigued to see, what happens, whether that is an indication of kind of some of that euro strength coming in, that euro strength weakening the DAX perhaps. But yeah, whereas everybody else had a big bounce, it hasn't followed through on the DAX. Close to home, we just looked at mid-cap index for UK, but FTSE 100, you can see as well, we have that kind of, that's a weekly morning star back up above 10,000. Right, we've pumped our way up there. You can see there, okay, the kind of risk on giddiness, and then you can see basically the sort of the price coiling up and the drop off that. But once again, even I go down to the 30 minutes chart, that was Friday, gapped down, okay, but we've been working away. We haven't completely filled that gap, but we have been working our way up, and now I see us there as that's just coiling between the 50 and the 200. Okay, maybe that's an indication of getting ready for the opening the US markets. We shall wait and see on that. Bitcoin here, weekly chart. I've just seen us pivoting that around about 70,000. That's what I see. Is that because we're coiling up for a push higher? I know lots of people would love that. Certainly on the daily chart, I wonder if just going to draw a very scruffy line here. Just basically, I see that as a kind of a support. Is there a case of bang? Okay, there we go. That we are kind of coiling up now. If you were looking at classical patterns, you might say, well, that is, that's a symmetrical triangle and a down trend. So we would expect you lower. So we shall wait and see. Personally, I think we're still pivoting around 70,000, and we're going to wait for something to be a catalyst of that. But as you can see, that that's the daily chart. So really, it's 2.5 months or so of that building. So I would put that on your watch list, watch to see how that particularly plays out. Gold. Well, gold had that double top. We'd fallen away, and then we pumped higher, and then we basically dropped. We dropped lower, okay, and then invariably we gapped down and pushed higher. It's kind of a bit of a strange one, gold, in that. We had a relief on rally there, okay. That was the ceasefire relief on rally, and then just kind of coiled up, dropped on the gap there. If I go down to the 30-minute chart, look at that. But then I'm surprised at how quickly we worked to fill that gap there, okay. People maybe that's just people just buying, pessimists and bears buying gold, okay, but it hasn't been able to get above the on the been able to get above the 200, has it? All right, so keep an eye on that one along with silver. All right, here we go. Silver. If I go to the weeklies, we fell away, we bounced, and we're back in that $70 to $80 range, which we have been in. You might say, once again, Paul, there's a bit of support there. Okay, there's clearly a bit of support there. Is that a case of is that just a trend line that's looking to break as it cracks south? Buying, is there a support building in? Which for me, if it gets back above the daily 50 and the daily 80, then would be of the in terms of how that's playing. So of course, looking at oil, looking at gold, looking at Bitcoin, looking at silver, they're all reflective of the sort of the move. We'll have a little look at the dollar and the sterling, and then we'll draw it to a close. I'll be kind of overrunning a little bit. It's just so much for me to share with you at the moment, isn't it? That we're never short of things. Aussie on the 4-hour, Euro 4-hour, Cable 4-hour, Dollar Swiss 4-hour, Kiwi Dollar 4-hour, Dollar CAD 4-hour, Dollar Yen. Okay, so always have a little look at the dollar index, especially to see not only is it just because of the dollar, but also because of its it's risk on, risk off, and you can see war on, risk off, dollar hollers, war off, risk on, dollar drops. Okay, and that's what we've been looking at here. Okay, we had that beautiful push to a new high. That is a bearish key reversal. Price pushed new high, rolls over, completes, closes beneath the low of the previous candle. We then can't push any higher, and then you can see a bit of war off, risk on, giddiness. Okay, bang, drop to the 50. We can't trade south of the 50 or south of the daily 200, and then today, we had this the 4-hour chart. That 4-hour chart there is the daily 50 there. Okay, pumped up, and we haven't. The interesting thing to me is we've not really kind of followed that through, has it? That kind of dollar strength has held up there a little bit, hasn't it? That's what I'd be kind of curious about. We look at euro dollar on the 4-hour chart. So there we had last week. That is war off, risk on, giddiness, the gap. But then once again, we've not pumped up to really fill the gap, have we? That price action there, the 20 looks as if it's acting as pretty nice. That's PO20. I wonder if we're going to see bang some continued dollar strength and a little bit of euro weakness kind of for this afternoon's session. Same with Aussie dollar's done kind of the same, hasn't it? 4-hour chart, war off, risk on, giddiness, then gap down, push back up, more so than euro did, but once again, it kind of looks like it's kind of rolling its way over, as does Kiwi dollar. Dollar Canadian is kind of even doing a version of it, as well. So, this afternoon session could be kind of a bit of an interesting one. Okay, in terms of will markets do what they want to do to fill those gaps, or will we get another swing as we get a new piece of news catalyst, all right, for the dollar. And then finally, as always, let's finish with sterling. So cable on the daily, euro sterling daily, pound Aussie daily, pound CAD, pound yen, pound Swiss, pound Kiwi, FTSE daily. Okay, so we've already looked at the FTSE and the mid cap. If I look at pound against dollar, I said this, I think, the last week or two. If we look at March, March was that is a great indication of the kind of volatility that was on there. Look, we gapped and we pumped back up to the highs of this, okay, kind of 134.50, and now I'd say, you've got price, the 50 and the 200 playing out. Now we do have UK GDP news on kind of Thursday morning, and we do have Bailey is speaking tomorrow and Wednesday, and whether that will have anything. But for me, I would look at that as sterling's kind of coiling up a little bit there, waiting for its next catalyst before it makes its move against the dollar, and invariably a lot of that will be really dictated by what the dollar looks to do. Okay, that's what we'll have there. Remember what I was saying is that that kind of risk of giddiness meant that yen dropped to the bottom of the STAM, sterling kind of was up third, fourth. Well, this month that reflects that. There's risk on, risk off in terms of sterling against the Japanese yen there. Sterling against Swiss franc, it is just that was the start of the war. The S&P said they had been were going to manipulate That's actually, like I say, that's a bit of a cup and handle sort of building there. Let me just draw this in. All right. Some might say bang, but there's a cup and handle building. Is that a push higher? Okay. For me, it needs to get above 200 to confirm on the pound against the Swiss franc there. That's what I'd be looking at. Um, yeah, pound against Aussie. mm, You know, you've got two kind of risk-on currencies there, sterling and Aussie, and so no surprise. First couple of weeks of the war, it's just madness. Then invariably we get, a bit of sterling pump and then a bit of Aussie pump. And now once again, it's kind of 190, 50, 20. Everybody's hoping for the ceasefire, but everybody wants that clarity. And the fact that the kind of last few days has been a bit messy is probably quite reflective of people's psychology. Everybody's just like, saying, right, what's going on? Let's get this sorted. Pound against Canadian dollar. Once again, I think that's another. I would look at version of a handle. Okay, it's not something I particularly trade, but I know a lot of people do like it and trade it. But once again, I'd say the fact that Canadian dollar's weakened and sterling has strengthened has probably been an indication of people's view about oil, all right, and invariably that they think that even with the collapse of those talks, people aren't as negative as perhaps they had been, and maybe that's the thing to take away from it. Fine, euro against sterling, you know, um, yeah, I talked about us coiling up in the middle of March, we kind of dropped, and then we pumped our way up. But then, just if you just look at where we are, almost 2 weeks into March, end of March, 2 weeks into April. If you're a position trader, it's not much love or joy to have there. If you're an intraday mean reverse trader, there's been a couple of little moves, and there was some nice moves on sterling this morning right out of the gate. Okay, if you're an intraday trader, but euro sterling there is just yeah, I'd say that's just a little bit caught up and doesn't really know what it wants to do at the moment. And when markets are like that, I tend to leave them alone. I let them, do their thing, and then I'll pick up the pieces afterwards. Okay, there we go, ladies and gentlemen. I appreciate we overran a little bit, but as I said at the start, I'm just trying to, share with you as much as I possibly can in the short time we have together. I hope you found that useful. I hope that's given you a little bit of help and a little bit of insight in what is going to be another interesting, volatile week. As always, ladies and gentlemen, make sure you're on top of your risk management. Make sure you can understand the order flow and the news flow as best you can. And as always, trade well, ladies and gentlemen. Have a great trading week. Many thanks. You're welcome, Sam. Great to see you here. You're welcome, Howard. Great to see you.